Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what's impacting rates and whether it might come from the economic calendar, from headline news, or some geopolitical. But sometimes it even gets even more confusing out there when you see good news come out negatively, and that's because the market sentiment changes from now good news to bad news and vice versa. So we get into it and kind of discuss as to what the thinking is behind the investors and what's driving these markets and where they're going, and hopefully give you the information you might be seeking. A little bit about myself is I am a loan officer. I work with a national lender. We do loans in all 50 states. We'd love to be able to earn your business if you're looking to refinance or buy your next property. So please reach out. But more than that, we'd like to be a resource for you folks. So if you have a question about something, please feel free to We'll pose it, and we would love to get back to you. So without further ado, we'll jump right into today's economic reports. Every week we get the initial jobless claims, and here's what last week it came in at 218,000 people applying for unemployment. Forecast is supposed to be a slight downturn to 215,000, but it dropped a little bit more down to 210,000. But if you look here, we had continuing claims. It did drop last week's revised slightly lower, uh, and it was supposed to even go further down this one, but instead of going down, it actually went upwards. So we see a rise in continued claims there. Now here's kind of a big one, the GDP. This is the preliminary for the first quarter. It came out initially at 1.4%, a drop, a contraction. Forecast account for a slight improvement to 1.3. However, instead of improving, it worsened by 0.1 to minus 1.5%. We also got pending home sales. These are signed contracts, not closes, for the month of April. So in March, it actually was revised slightly lower from 103.7 thousand seasonally adjusted units to 103.3, and then it dropped all the way down to 99.3. So that's a 3.9, or a drop of 3.9%. So, not great news. Only decent one was jobless claims. However, depends on how you look at it. We were for a while they're under 200,000, and then kind of popped back up. And then, but of course, GDP worsened. That's something we'll definitely need to keep our eyes on. They are kind of projecting a better results for second quarter, but we'll have to wait and see if that actually translates. I know that housing, real estate makes a big adjustments for GDP, and of course we've been seeing that on the decline. So that will be interesting to see if anything else takes up the slack in that. We also had the 7-year auction. This came in actually very strong, and that helped out mortgage-backed securities a little bit here. Um, right now, stocks are in actually positive territory. They've been doing pretty well this week. They kind of seem to rebound a little bit. Dow sounds like it's going to break its was it that 9 or 10 week losing streak. So they actually might break that, which was the longest we've seen in approximately 90 years. Yeah. Here's the today's. We're up against the 50-day moving out. 50-day moving average. So we are challenging it today. Right now we've been kind of hovering back and forth from this -2 to like +3 range and zero. So here's a kind of volatility. Morning on, we kind of dropped, and then we came back a little bit. So we've been kind of this more of a sideways pattern right here for lately. After the 7-day moving, the 7-year note auction kind of helped us out, pushed us back upwards a little bit here. Let's go back here. So again, we're up against a 50-day moving average. The yield's kind of similar. It's up against its 50-day moving average, which also has a technical ceiling or floor. Excuse me. And right now it's just under 2.77 right now. So lastly, we'll go over the 30-year average rates for conforming loan limit in the U.S. These do have points built in. They are usually delayed about a day, primarily because it's taking the market's data from yesterday. So right now, 30 years at 5.27, 15 years at 4.73. So we did see some improvement. We were in the high fives. Now it looks like we're in the low fives now, which is good news. Hopefully for those who are looking to buy or even refinance to get some enjoy some of that improvement. And just now it looks like the market is worsening again a little bit. Now we're down about 8 basis points. This isn't quite enough to make any changes in terms of pricing for our mortgage rates. So mortgage rates should be pretty much relatively unchanged from yesterday. So just kind of give you a heads up on that. But it looks like if this continues at minus 11, if this continues and it looks like it's going to hang in there for a while, lenders may decide to reprice. Once we start hitting 12 and it usually maintains that or more, that's when we'll see a price change. A price change for the worse, or even better if it's actually getting if it's the opposite direction. All right, folks. I hope these give you the information you're looking for. If you guys got questions about anything, please feel free to reach out. We're here for you guys. We want to thank you very much for watching. If you can help us out and smash that like button, we greatly appreciate it, and share. Um, so greatly appreciate you folks helping us out here. Again, thanks for watching. We'll look forward to see you guys in tomorrow's video. Remember, tomorrow is a big day. We got the PCE, and that could have a very high volatility there. So just be prepared for some volatility tomorrow with PCE data, which is the Fed's favorite gauge for inflation. Of course, we all know that's the hot topic of today. Take care. Bye-bye.